Hi guys, welcome to my YouTube channel. Today we are going to look at the preparation of functional budgets under cost and management accounting. The presentation outline is as follows. 1. We shall look at introduction to functional budgets. Then we look at importance of functional budgets. This will be followed by types of functional budgets. I'll give you steps in preparation of functional budget, and finally I'll look at the worked example on functional budget. As part of the introduction, I want to cover two things. I want to concentrate on definition and then look at the key purpose of functional budget. Functional budgets are a critical component of cost and management accounting. They provide a comprehensive financial plan for a business. A functional budget can otherwise be taken to be a financial or quantitative statement for a function of an organization. It actually summarizes the policies and the level of performance that is expected to be achieved by that function for a budget period specified. The key purpose of functional budget is to forecast and control a company's operations in various functional areas. What of the importance of functional budgets? I came up with a few points to underscore the importance of functional budgets. One is that there is better financial planning. How is this possible? During budgeting or any budgeting process, you realize that there is an element of coordination, so that there is no suboptimal functions which are going to be created or activities which might be militating against other important functional areas. So if the process is well coordinated, it will end up producing a better financial plan. The other point which we look at in this particular case is that there is an efficient resource allocation process. Normally, it will end up giving you an efficient resource allocation. So when you look at resources, we take it that resources are scarce relative to demand. Okay, so in this particular case, we endeavor to make sure that whatever input we have, we derive maximum benefit from every unit of the input. So that is what can lead to efficient allocation of resources. We also look at functional budget as a means by which we can carry out performance evaluation. When you prepare a budget, it becomes more like a yardstick or a benchmark against which you are going to relate your actual performance. And then you can make an evaluation and find out whether you are better off or worse off during the budget implementation of activities. The other point I want to labor on is goal setting and monitoring. Again, because you are going to budget like any other budget, it will require you that you set up your goals, right? And then with those goals set up, it will avail you a chance to be carrying out a comparison between what you are doing and what you set yourself to achieve. Therefore, you have a means to monitor your activities by relating them to your budget. We also have decision making. As an offshoot of functional budgeting, you can see that because you are able to monitor your performance in comparison to your budget, you can actually be assisted, or that budget can facilitate decision making. When you look at budgets, there are a number of factors that are assumed to going to be the outcome of a particular activity, but there are certain other variables that might not be envisaged at the time you are planning. So things are bound to change. So now when you look at the operationalization of activities in the budget, you might reach a point after periodic review where you might think it is necessary to make amendments. So such is facilitated by the presence of a budget, like in this case a functional budget. It will assist you to make decisions. What types of functional budgets are we talking about? A number of functional budgets can be looked at, which include sales budget, production budget, direct materials budget, direct labor budget, manufacturing overhead budget, selling and administrative expenses budget, as well as cash budget, to name a few. What steps are involved in the preparation of functional budget? The steps can take the following outlined. I can say step 1 might require you to carry out a sales forecast. Now, when you are looking at a sales forecast, you are making a projection of what sales will be in future. Now, to do a proper sales forecast, it might require you to look at past sales data and maybe analyze the trend through trend analysis. It can help you to predict what type of sales are likely to be at a particular specified time in future. You can also look at the industrial benchmarks, or what are the expectations, or what are the average expectation of that industry in that particular area. Another thing that impacts on your sales forecast is the economic trends. You need to understand the economic situation which is going to play out at the time you are going to implement this particular budget. So in dealing with in coming up with a proper sales forecast, all these need to be considered. Step 2, production budget. When you are coming up with a production budget, you find that you could have started with a sales budget as a first budget to be prepared or to be thought about. The sales budget can be taken in certain cases to be the limiting factor. Why? Because you don't want to produce more than what you can sell. Okay, so what will have be a determinant of what you are going to produce will be dependent on what you have estimated to be your sales. So normally the sales budget will be the first budget to be prepared because it can be taken to be a limiting factor. So you synchronize your production to quantities of sales. So that's why the next budget will be production budget. You have the next one, which is step 3. You can come up with a direct materials budget. Once you have come up with a production level, then you can think about how much materials can those units to be produced consume. Therefore, you can come to the direct materials budget. Now, under direct materials budget, there are 2 sub-budgets that you can talk about. You can talk about the material utilization or usage budget, where you are actually focused on the quantity of materials to be used in production. You can also talk about materials cost budget. Then in this particular case, all you need is to put the monetary aspect to the quantities that need to be used in production. So that will be the material cost budget. The third step can be the direct labor budget. The direct labor budget, just like direct material budget, can only come after you have established a production budget. So with the direct labor budget, you need to know how many, for instance, hours are required to produce the levels that you have set. That will be in hours, that will be the labor usage or labor utilization budget. So it will be in hours. Then when you find the financial cost of those hours to be used in production, then you are talking about the labor cost budget. Step 5 is come up with overhead budget. The overhead budget is a budget of all the costs which cannot be taken to be direct costs. Now, normally the overhead budget requires that you come up with an overhead absorption rate. Okay, overhead absorption rate, which you are going to use to absorb the overheads. Now, the overhead absorption rate requires that you pick what base of absorption you are going to use. Is it production units? Is it material cost? Is it based on percentage labor cost? Is it based on percentage prime cost? Or you can look at, is it based on machine hours or indeed labor hours? So when you pick one and consistently apply it year in, year out, that becomes part of your policy in the preparation of overhead budget for that particular entity. Step 6 will require that you prepare a selling and administrative expense budget. Again, you can come up with an overhead absorption rate based on what I've just explained, so that you can plan for the cost of selling and administrative expenses. Finally, one of the functional budget you can come up with a cash budget. A cash budget is a projection of cash movements, the cash inflows and cash outflows, and the closing and opening balances for particular periods. So these are the steps that you can follow in preparation of the functional budget. Now let's look at a practical example that we're going to run with, so that we see how a functional budget can be prepared. In this particular case, we are looking at Masala Enterprises, which produces 3 products, namely microphones, speakers, and amplifiers. The coming accounting period budgets are to be prepared using the following information. So you have been given, in this particular case, budgeted sales. You have also been given budgeted finished inventories in units. You also have budgeted usage of raw materials. This shows the rate of usage of materials. And the materials we have are copper, steel, and plastic. So the rate of usage per unit of the product in the form of microphones, speakers, and amplifiers. That's what we have before us. You also have raw material inventory. So it shows you the closing and the opening balances in kgs. Furthermore, the question also gives us the budgeted hours per unit and rate per hour of labor. So for the products, microphones, speakers, and amplifiers, hours per unit are given as 4 hours per unit of microphone. So meaning to produce one microphone, you spend 4 hours. To produce one speaker, you spend 6 hours. To produce one amplifier, you spend 8 hours. Then it also gives you the cost per hour, the rate per hour, which is in this case 10 kwacha per hour if you are working on microphones, 8 kwacha per hour if you are working on speakers, and 15 kwacha per hour if you are working on amplifiers. So what tasks do we have? You are required to prepare the following budget: sales budget 2 marks, production budget 6 marks, labor budget, material usage budget, material purchases budget. So these are the budgets that we are required to prepare. So let's look at how we prepare this. Normally, in the budget preparation function of budgets, you find that the first budget to be prepared, unless otherwise specified, is the sales budget. Why? Because the sales budget is a limiting factor. The sales normally are the limiting factors, meaning that they determine the scale of operation of an entity. So that's why the first budget to be prepared is a sales budget. So, and the sales budget is the easiest budget to prepare. That's why it attracts very little marks, because there's very little thinking involved. So here we are. Let's look at how we prepare a sales budget. Now, to prepare a sales budget, all you need to do is identify which products you are supposed to sell. In this case, we have the three: microphone, speakers, and amplifiers. And we only go back to the question to see what quantity are we projected to sell. For microphones, we projected 2,000, speakers 4,000, and amplifiers 3,000 units. So that's what we run with. So we come here and put them: sales units, and the microphone 2,000, and the speakers 4,000, and the amplifiers 3,000. Then you just go back and find out what is the selling price per unit. So you look at this particular case. For microphone is 100 kwacha each, and speakers 130, amplifiers 150. So you come to the budget which you have prepared. So sales per unit 100 kwacha for microphone. Speakers, it is 130 Zambian kwacha. Amplifiers 150 Zambian kwacha. So that's what we have. Okay, so this is a sales per unit. Since we know the units, we just multiply. So 100 times 2,000 give you the total 200,000. 130 Zambian kwacha by 4,000 units will get the total 520,000 Zambian kwacha. And the speakers and amplifiers, we have 3,000 units multiplied by 150 kwacha per unit. That gives you 450,000 Zambian kwacha. So if we add across the totals, we get 1,170,000 Zambian kwacha at the total sales budget. So this is the total revenue we expect to generate in this particular budget at the end of the budget period. Okay, so that is the sales budget. Let's look at how do we produce the production budget. Now, to produce a production budget, again, you identify which products you are supposed to produce and sell. This is microphone, speakers, and amplifiers. Now, how do we determine the production units? How do we determine the production unit? I'll show you a simple analogy here. Show you a simple analogy. In this particular case, this is the production budget. So how do I get to analyze it in this way? So let me show you one kind of relationship that you need to know. We know very well that sales, what we sell is determined by what we started with, which is opening stock, opening stock. Then we add to that what we produce, that is production, and then what we started with what we produced. Then if we removed what we remained with, we removed closing stock, okay, that will give us the quantity we sold. So opening stock plus production gives you the total items available to be sold. Then if you remove the closing stock, it simply gives you what you actually sold. That's the idea. If this analogy is correct, then we can simplify it in this way to say, suppose we wanted to make the production the subject of the formula. Okay, so it means that we are going to have sales, okay, then minus opening stock, and then plus closing stock. We have closing stock. Okay, so sales minus opening stock plus closing stock is what will be production. So we have just made production the subject of the first relationship. Okay, so we're looking at this one as a mathematical statement. So we have this. Let me finish this one. Opening stock. We have opening stock here. Okay, fine. So that's what we have in this particular. So given that we have established this relationship, we can rewrite it in this manner to say, in this particular regard, we are saying production is equal to minus opening stock, okay, then plus closing stock to give you what we produce. Then this one is what is subtracted from sales. Okay, so we have production, therefore, just rewriting the second statement, rearranging it. So we have production, therefore, is equal to sales minus opening stock plus closing stock. That's the case. So from this, we can use it to prepare a statement which is going to show us what we are supposed to produce, given that we have the sales, we have the opening stock, and we have the closing stock. So that's what is used in this particular case. You can see that we have the sales, which is in this relationship. We have the sales here. Okay, and we also have the opening stock. Okay, we have the opening stock here. Opening stock. And then we have again the closing stock. That's what I've used. We have the closing stock here. So if we look at that, then you give us this end item here, the production. So we are going to end up having production. Okay, so that's the analogy. So all these sales units, we have it. We can go back to our budget, which gave us that the sales are for microphones 2,000, speakers 4,000, amplifiers 3,000. That's what we have plucked from there and pushed them here. Under Microsoft, sales unit 2,000, speakers 4,000, amplifiers 3,000. We have inventory for finished goods. We go to this finished products. You have the beginning. That's opening stock 500 for basically microphones. Let me just move them a bit. Okay. Move a bit again. So that's what we have here. Okay, fine. So we can see that microphones, the opening stock is 500, ending is 600. So we come here. microphone, opening stock 500, closing 600. We go to the other one. Speakers, the opening stock 800, closing is 1000. 800 minus closing, add 1000 there. Equal, we go to look at amplifiers. For amplifiers, opening is 700 here, closing is 800. So that we have opening is 700 negative, closing positive 800. So you add and subtract. So 2000 minus 5500 plus 600 gives you 2100, meaning that with this analysis, your projected production is supposed to be 2100 units of microphones. Equally for speakers, you have 4000 minus 800 plus 1000. The projected production for speakers is 4200 units. For amplifiers, you have 3000 minus 1000 plus 800. The projected production for amplifiers will be 3100. So we have obtained production budget. This is how we are going to produce. Okay, so we move on to look at the next budget, which is the labor budget. Now, having looked at the production units, for labor budget, you want to know how many hours are you going to take to produce the projected production levels of 2100 of microphones. 2100 of microphones. Let me just make a bit of adjustment here. Okay. Okay. Okay, that's fine. The thing. Okay. So 2100 of microphones, 4200 of speakers, and 3100 of amplifiers as given in the production budget. This line here. Okay. So now, once that is done, we have indicated the production units. The next thing we need to look at is each of these units of microphone, speakers, and amplifiers. How much or what the quantity of raw materials is needed to produce these units? So the raw materials are three. There is copper, there is steel, and there is also plastic. There is also plastic. Now, we want to know, to produce these quantities, how many units of each of these raw material will be applied to produce 1 unit of microphone, speakers, and amplifiers. So we go back to the question data. So we have this particular projection of budgeted usage of raw materials. So it gives you in terms of consumption of materials, copper, steel, and plastic on the production of microphone, speakers, and amplifiers. So we are given these rates here. We are given these rates. So for microphone, one microphone will require 5 kg of copper. It will require 2 kg of steel, and it will require no plastics. Okay, it will require no plastics in this particular fashion. So that's what we are given. So we need to realign this one to reflect the rate of usage of materials. So when you come to the budget, you come up with a usage rate. So for copper, so you go to the copper, you look at this one, copper, how is it applied to the, so come to copper. For copper, you are showing that 5 kgs of copper required to produce one microphone, 3 kg of copper to produce one speaker, 2 kg of copper to produce one amplifier. So it's 532 of copper applied to microphone, speakers, and amplifiers. So that's why 532. So come here. So you have 532 to be used on microphones, speakers, and amplifiers. In a similar fashion, we come to look at how do we use steel on microphone, speakers, and amplifiers. Steel, come here. For steel, it requires 2 should go to microphones, 2 should go to speakers, 1 should go to amplifiers. So it's 2, 2, 1 to microphones, speakers, and amplifiers. So come here. So microphone, speakers, and amplifiers is 2, 2, 1. 2 kgs for 1 unit of microphone, 2 kg for 1 unit of speaker, 1 kg for 1 unit of amplifier. So we go to plastics. Go to plastics. So what is the question telling us? The scenario given for plastics. Microphone does not need any plastic in this fashion, but 2 kgs will require for 1 unit of speaker and 3 kgs will require for 1 unit of amplifier. So 0, 2, and 3 to microphone, speakers, and amplifier. So we come to that. So 0 for microphone, 2 for speaker, 3 for amplifiers. So once we have got the rate, it's a question of now multiplying this rate by the quantity. So 5 times 2,100 will give you 10,500. Then 3 multiplied by 4,200 will give you 12,600. Then 2 multiplied by 3,100 will give you 6,200. So this is how these products are going to use up kgs of copper, such that at the end of the program we are going to use a total of 10,500 on microphones, 12,600 on speakers, 6,200 amplifiers. Total copper used to be used 29,300 by adding this 10,500, 12,600, and 6,200 to get 29,300. Okay, that will be the total kgs, okay, of copper. So I can put here total kgs of copper. Okay. So now the same applies to steel. It's a question of multiplying 2 times 2,100 to get 2,000. We get 4,000. Actually, it's 4,000. Sorry, 4,200. And then this one will give you 2 multiplied by 4,200 to give 8,400. Then this one will be 1 times 3,000 will give you 1 multiplied by 3,100. 1 multiplied by 3,100 will give you actually 3,100. Let me just make a rectification. 100. Okay, so 3,100. So if you had to add, let's put it up a bit. If you had to add, let's add this one. We're going to add 4,200 plus 8,400 plus 3,100. It will give you a total of 15,700. Okay, 15,700. That's what it's going to be. Then here you have again 0 multiplied by 2,100 will be 0. Then 2 times 4,200 will be 8,400 again. Then 3 multiplied by 3,100 will be 9,300. If you add these, you are going to get 17,700 as a total. So that is the total you are going to get. That is the total you are going to get. Okay? So we would have done the material usage budget. Then we look at the materials production budget. Materials production budget. Oh, material purchases budget rather. Materials purchases budget. After material usage budget, material purchases budget. So purchases budget. Okay? Purchases budget. So how do we go about it? In a similar fashion to what I showed you in terms of relationship, we can make use of this same type of relationship here. You can copy this one. Okay, copy this one. Just want to emphasize, or maybe I can just use this same one. Okay, where okay, let me look at this one down there. Okay, now what am I doing? What have I done? Okay, what is it? Okay, fine, like that. Now in this particular case, we are planning for purchases. We are planning for purchases, so it's not production. We are planning for purchases. So we put this one as purchases. Okay, and we are not selling but using, so usage here. The others remain as before. So that's this relationship we are going to use. This is the relationship we are going to use. Purchases is equal to usage minus opening stock plus closing stock. So that's what we are going to use here. Usage minus opening stock plus closing stock is equal to purchases in kgs. Okay, so that's what we are going to have. So how do we determine the usage? We have just calculated the usage budget here. We have just done the usage budget. We have seen this. So for copper, we intend to use 29,300 kgs. For steel, we intend to use 15,700 kgs. Plastic, we intend to use 17,700 kgs. So that's what we are going to use in this particular case. So we bring them 29,300, which is this one. For copper, 15,700 for steel, 17,700 for plastic. Then we have in this question the opening inventories for raw materials. For copper, 21,000, closing 18,000. Okay, so that's what we're using. Copper, 21,000, closing 18,000. When we add and subtract 29,300 minus 21,000 plus 18,000, we are going to have 26,300 as what we need to purchase. For steel, again, we do the same. If we look at what we plan to use is 15,700. What are we going to start with? 10,000. From where we get it? From this inventory schedule here. We have 10,000 and opening stock and closing stock 9,000 under steel. Under steel. Under plastic, in a similar manner, we have those quantities. Okay, so under steel, opening is 10,000, closing is 9,000. That's what we run with. Materials purchases. So 10,000 closing 9,000. When we add and subtract, so 15,700 minus 10,000 plus 9,000, we are going to have 14,700 kgs. 14,700 kgs. Okay, similar manner we deal with the plastic. So if you look at plastic, open inventory, it's here. It is giving you that the beginning is 16,000, the closing is 12,000. 16,000 and closing is 12,000. So we subtract 16, add 12. So we come here, we subtract 16,000, add 12. We are going to have 17,700 minus 16,000 plus 12,000. We're going to end up with 13,700 kgs. Then we are given the price per kg. If we assume that the price is as given, cost per unit for copper 5 kwacha Zambian kwacha, steel 3 kwacha, 3 kwacha Zambian kwacha, and plastic 4 kwacha Zambian kwacha. So all you need to do is just multiply to find the total cost for those quantities to be purchased. So we have already got these quantities to be purchased, and we have got these costs per unit. So multiply 5 kwacha times 26,300, we have 131,500 Zambian kwacha. 3 kwacha times 14,700, we have 44,100 Zambian kwacha. 13,700 times 4 kwacha, which have 54,800 Zambian kwacha. So meaning that the total costs, what we are going to spend to buy the materials required, will be a result of adding all these figures for copper, steel, and plastic to get a total of 230,400 Zambian kwacha. That will be material purchases cost budget. So this one is more like material purchases cost budget. This one in material purchases budget. Material purchases budget is this one. Okay, in kgs. Then material purchases cost budget is this one. Okay, so that's what we have. So that's how we prepare a functional budget. Thank you for listening. If you have any queries, please drop me a line, and please don't forget to like my channel, subscribe to my channel, and like my video if you are impressed. That gives an encouragement. Otherwise, see you next time. I'm going to look at cash budget preparation, and the other one will be dealing with the flexible budget preparation. Thanks for listening. See you next time.